Hey everyone, welcome back to another episode. Is the US economy heading for a recession? Now, there has been a lot that has been happening over the past few weeks. It has been crazy. The volatility is insane. And so we just really want to know what really is happening with the United States right now. How has Trump's policies really affected the entire market? So with a recession, by definition, it is just a decline over 2 quarters. It's a consecutive decline over 2 quarters. And there is another definition where they say that it's actually a fall in the GDP over a set period of months. And so, as it stands right now, the S&P 500 and the Nasdaq indexes are down year to date about 6 and 8% respectively. GDP is still up. The last reported GDP figure, which was as at December 2024, was actually up 2.8% at the end of December. So as it stands right now, the data is suggesting that United States economy is pretty stable. It's just a lot of fear that's driving the economy right now. So if you check the standings fear and greed index, you'll also realize that the level of fear in the market has been extreme. And so the level of fear in the economy, the level of fear in the market right now is actually at 20. So that's the number that's assigned to it. And it's in extreme fear, which is one of the lowest that it has ever been at recently. And actually the last closed figure was actually 16, which was even worse. So what really is causing all of this fear? What is causing investors to be selling off? What is causing the stock markets to plummet the way that they have been doing over the past 2-3 weeks? So when you look at exactly what's happening in the market, it's really what is currently being inputted by the president admission. For those of you who are unaware, so Donald Trump had actually announced tariffs. So he has been back and forth with tariffs between Mexico and Canada. So he had first proposed it back in February, and then he had delayed it for 30 days. And then tariff talks were back on the table in March, and he's actually going to go full speed ahead with the tariff. Now, you might be wondering, why is Donald Trump pushing tariffs so much? So the actual logic behind what Donald Trump is doing is saying is that for too long the US government and the US have been taxing the residents. So businesses, individuals, all those persons have been taxed heavily in the United States. And what the president is saying is that he wants to change all of that. So he wants to change the laws so that rather than taxing the residents, he is proposing to and has been implementing that foreigners be taxed. So what that means is that since the United States imports so many different things, they should really be getting some income from these imports. And so that is the basis and the premise on which he has developed his tariffs and his tax plans on. So the whole logic behind it is that rather than have the world be rich off America, he's saying let America be rich off the world rather than let America be rich off the resident, well, at the expense of the resident. So what it's very simple what he says. If you don't want to pay the tariffs, do the business in the country. And the whole logic behind what he's saying is that with the tariffs is that these companies who had migrated overseas because it was actually cheaper to produce these goods and services overseas, his aim is to get them back onto US soil. So these companies, and just like Nike, Apple, Microsoft, just to name a few, they, back after the 2007 recession, had actually moved their factories overseas because it was actually cheaper to produce the actual goods that they produce and made. So what they did is they moved their factories overseas into the Asian markets, and then they'd have the goods made there, and then it probably would just be assembled in the United States, and then it would be sold worldwide. So what President Trump is saying is that with these tariffs now being implemented, it actually would be cheaper for you to operate your business in the United States. And the whole point and aim of it is that with businesses being operated in the United States, more Americans will have access to jobs again. And he's also clamping down on the illegal immigration. Now, I'm not saying I'm an advocate for Trump. I'm just stating the facts. I'm stating what he says he's going to do and what he has been implementing. So this is nothing to say I am for Trump or against Trump. Just stating the facts. So he actually, so after the so the aim is that the companies will move their operations into the United States. They have their operations in the United States. They'll actually get US persons to be employed in these factories. So they will now operate, assemble, create, make the products in the United States, and then it will be shipped worldwide. So rather than have the products being made overseas and then imported into the United States and then assembled and shipped back out, he's saying let's do everything in the United States and then ship it out to the world. And he himself has said it that the markets are going to experience volatility temporarily in the short run, but the whole aim and hope and strategy behind it is that in the long term run, so the next 12 months, 24 months, 36 months, the markets will stabilize and persons will be better off over the long run period rather than currently. And so with all of this that's currently being happening, everyone is afraid. Everyone has been panicking, and it shows in the stock market because there has been huge sell-offs, as can be seen with the S&P and the Nasdaq indexes. So far they have been down significantly, and on top of that, companies that were doing exceptionally well for the last 3 to 5 years have also been experiencing negative returns. So companies such as Apple, Meta, Microsoft, Nvidia, Chipotle, all are down. The only companies right now that have actually seen share prices above what they started in January is Kellogg's and McDonald's. Out of the few that I checked, there are others obviously on the markets, but those are the two that I checked that have been actually doing above the market return. So they have been making positives in terms of the share price. Now the banking industry, which actually did start the year really well has fallen as well too. So companies such as Amex, Discover Finance, BOA, Bank of America, they all have declined over 5%, every single one of them. And this really goes against the beginning of the year when I had predicted that the banking industry would be one of the top performing industries, and it actually was one of the top performing. It was one of the last sets of industries to actually fall into the negatives for the year to date, and they just really couldn't hold out any longer. And so what really has happened is that with the huge sell-offs, everyone got hit, everyone got affected, and it's just McDonald's and actually Kellogg's and a few others that have actually been doing well or fairly well compared to the rest of the market. And so, with that being said, how does one really protect or invest against with this volatility? It boils down to what we've been talking about for the last 3 months. Have a winning strategy and stick with that winning strategy. So you want to actually invest in such a way that regardless of what's happening in the market, it has very little to no effect on you. So you want to have a lot of cash on the sideline, so when the huge sell-offs happen, such as what had happened at the beginning of this week and last week as well, you'd have actually deployed that cash into these stocks. And that was one way. So the dollar cost averaging was actually looked at, and I'll link the videos as well for each of them. So the dollar cost averaging is probably one of the best ways to invest right now, because regardless of the share price movement, you are just sticking with investing the same amount over a set period of time. And there's also shorting that you can do and in the market, so that will actually also have given you some amount of leverage and actual returns on your portfolio. So these are some of the best ways to protect your money, and it has been shown that investors are moving into safer alternatives such as the treasury bills and bonds. I don't necessarily agree with that, especially if your goal is stock trading and to maximize returns in the market. I wouldn't necessarily agree to going into bonds and money markets unless it's temporary. If it's long term wise, I'll avoid it. So there's actually this video that was circulating on Instagram where they had actually asked Mark Cuban, a very famous investor, one of the investors on Shark Tank. So they had asked him, they said, if you have $1,000 right now, where would you invest it? And he said he would go to a money market instrument and they're paying 4%. And he says that is good investing. Now, investing $1,000, getting 4% for the year isn't the best use of your efforts. And I'm going to tell you why. There are so many other things that you can actually do with that $1,000 to actually increase it, to actually get it into $2,000, $5,000, $10,000. Why would you tie your money up into a money market fund only to get 4% on that return? Now, I'm not saying that I necessarily agree with this, but what I'm going to share with you is something that Alex Hermosi has been speaking of a lot lately, and that is, if you have $1,000 to invest it in yourself, develop yourself, because you have the best return. Why not bet the money on yourself, because you will have the best return. So he has a play on words where he says invest in the S&P 500, not the S&P 500, which really is just saying invest in yourself. So if you have $1,000, get educated, watch videos like these, do courses, go to seminars. And if you're unsure where to start, where to go, Get Smarter is a perfect place to start. So they actually connect you with top universities across the world, and they have short courses. I personally have done courses on Get Smarter, and it has made me a much better investor. It has taught me so much about the investment world, so much about actually financing and data modeling, those sorts of things. So if you're interested in learning an additional skill, you're interested in actually making yourself better off, invest in your education, and Get Smarter is a perfect place to actually start. And so what they do is they link you with different colleges, and you can do just about any course that you want, and you get a certification at the end. So it's the perfect place to do. So with that being said, thank you guys so much for tuning into this episode. I do hope that you enjoyed this video. If you do, feel free to give us a like, a thumbs up, heart, leave any comments down below, share this episode with a friend, family member, or a loved one. Have that discussion, and also subscribe so that you do not miss out on any new episodes as soon as they are launched. Until next time, take care. Love you guys. Bye.